Think you need thousands of dollars to start investing? Think again. Even with just a few dollars, you can begin building your wealth today. In this video, I'll show you exactly how to start investing with little money, the best beginner friendly platforms, and the key strategies you just need to know how to grow your money over time. Let's dive in. You won't want to miss this. Hey everyone, welcome back to my channel. And if you're new here, I'm Mallika Jain and I'm here to help you make smarter financial decisions so you can build a secure and fulfilling future. Today, we are going to break down investing for beginners, especially if you think you don't have enough money to get started. So, spoiler alert, you don't need a lot to start investing. And today, I'm going to show you exactly how you can get your foot into the door. So, grab your coffee, settle in, and let's get started. First thing first, why should you start investing, especially when you don't have much to begin with? Investing is one of the most powerful ways to grow your money over time. By investing, you're putting your money work for you and compounding its growth year after year. And here's the exciting part. Thanks to technology and new investment platform, you no longer need thousands of dollars just to get started. According to a survey by Charles Schwab, 59% of Americans says they wish they had get started investing earlier. The reason? The earlier you start, the longer your money has to grow through the magic of compound interest. Imagine your money working 24 by 7, generating returns on top of the returns. It's just like a planting a tree. The sooner you plant it, the bigger and stronger it grows. You might think investing only for wealthy people and or just the financial experts, but that's a myth. CNBC recently highlighted how micro investing platforms like Acorns or Robinhood have completely lowered the barrier to entry. You can start investing with as little as $1. That's less than your daily coffee. So these platforms are great. They're making investing accessible to everyone, regardless of your budget or your background. But before you dive in, let's clear up some common misconceptions that hold many people back. One of the biggest myths is that you need a lot of money to start, and this couldn't be further from the truth. Many investment apps are specifically designed for beginners who are starting small. Apps like Robinhood, Acorns, or M1 Finance lets you begin with just a few dollars and grow your portfolio at your own pace. And here's another myth. Investing is too risky. Sure, investing comes with some level of risk, but the key is learning how to manage it. Diversification is your friend here. By spreading your investment across different assets, you just reduce impact of any single investment's poor performance. Think of it like a balanced diet. You don't want to eat one food type at all time. You don't want to eat just carbs. You want to have protein, you want to have fiber. Similarly, your portfolio should be balanced to give you the best returns. Lastly, there's a belief that you need to be financial wizard to invest. In reality, tools like robo-advisor and automated portfolios means you don't have to pick individual stocks or the time of the market. And these tools use algorithms just to create a balanced portfolio for you and make it's really easy to start without needing to know the ins and outs of the stock market. Now let's get into actionable steps on how you can start investing with just little money. The first step is choosing the right platform. And if you're just starting, you'll want a user-friendly app that doesn't charge high fees and allows you to invest with small amount. Robinhood, for example, is great because there are no trading fees and you can buy fractional shares, and which means you can own a piece of high-priced stocks like Amazon or Tesla without paying hundreds and thousands of dollars for one stock. Another fantastic option is Acorns. Acorns is a micro investing app that rounds up your spare change from everyday purchases and invested it for you. So if you're buying a coffee for $2.75, Acorns round it up to $3 and invest that extra 25 cents for you. It's a painless way to start investing without even noticing the money is gone. You're essentially investing your own spare change, and believe me, it adds up faster than you think. Not talking about the last choice, M1 Finance. M1 Finance is another great choice if you want a little bit of control. It allows you to build your own custom portfolio or choose from your expert build option, and it automates your investment to keep your strategy on the track. You can start with just $100 and get a taste how diversified investing feels like, even on a small scale. So once you picked your platform, the next question is what do you invest in? So for beginners, index funds and ETFs, that is exchange traded funds, are excellent starting points. These companies allow you to own a tiny piece of hundreds of companies all at once, providing built-in diversification. For example, investing in an S&P 500 index fund means you own a small slice of 500 largest companies in the US, spreading your risk and capturing the overall market growth. So, if the stock market seems overwhelming, start small and automate your investments. Set up a recurring transfer, even $10 a week would be good, from your bank account into your investment account. This way, you're building a habit without having to think about it. Let's also talk about some simple strategies to maximize your return, even with the little money. Reinvesting your dividend is a powerful move. Dividends are payout that some companies make to their investor, and instead of cashing them out, you can reinvest them to buy more shares. This creates a compounding effect where you earn money on both of your original investment and the dividends you have reinvested. Most platforms, as I said, Robinhood and One Finance, offer automated dividend reinvestment options, so you don't have to lift a finger. Actually, you do. You have to press the buttons. Another key strategy is to keep an eye on the fees. Even low cost investment can eat into your returns if you're not careful. Look for the funds with the low expense ratios, which are the annual fees charged by funds to manage your money. High fees can quietly erode your gains, especially when you're investing very small amounts. So always keep them in the check. All right, investing isn't just about building wealth, it's about learning the valuable financial habits. Start small, stay consistent, and gradually increase your contribution as your confidence and your knowledge grows. Remember, investing is just a long game, and the most important part is just to start, no matter how little you have. So, there you have it, a beginner's guide to investing with just little money. The key takeaway: start now, no matter how small. Whether it's just a spare change or just a $10 a week, it's all adds up. And the earlier you begin, the more time your money has to grow. So, if you found this video helpful, please give us a thumbs up, subscribe for more investing tips, and let me in the comments that have you started investing yet and what's holding you back. And let's share our tips and experience with each other. Thanks so much for watching, and remember, the best investment you can make is in your future, and I'll see you in the next video.